we're starting to see mainstream interest come into the sector, and a third consecutive blowout quarter is going to get these fund managers really interested in this sector, especially if the stock market starts to roll over in earnest. It's starting to roll over here today, and investors are going to look for something to rotate their incredibly huge AI gains into something that is undervalued. And I don't think there's very many sectors out there more undervalued than gold stocks, despite the gold price being up 34% this year and trading at all-time highs over $2,700 an ounce.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are watching and listening to the Financial Survival Network. I'm your host, Kerry Lutz. Well, gold broke 2,700 the other day. Silver was up there, $35 silver, just a hair's breadth away. Well, let's find out exactly what's going on, because we talked about this a couple of months back with David Erfle, juniorminerjunkie.com. And if you got a question for David, myself, email kl@kerrylutz.com. David, as always, welcome back. So the market's kind of got new life in it since silver started taking off.
Yeah, thanks, Kerry. Always great to be on the program with you. Yeah, I mean, we've been expecting this to happen, but it's always the timing, right? We just didn't know when. And sure enough, it was the silver price that triggered everything. And 32.50 was really strong resistance in silver for quite a while. And a couple of weeks ago, the gold price had an $80 correction, and finally and we saw some selling in the miners, more selling in the miners than you would expect. But at the time, excuse me, the miners were consolidating in a bullish flag, in a 4-week bullish flag from a huge move in early September. In early September, we saw GDX and GDXJ go up double digits in 1 week. So that move had to consolidate, and it was consolidating there for 4 weeks. And then during that $80 correction in the gold price, the miners broke down out of that flag intra-week and came down to test their 50-day moving averages. Well, they moved right back up into that bull flag, and it was pretty much a bear trap. And at the same time, the SIL and SILJ made 52-week highs that week, while GDX and GDXJ did not. And this was taking place while silver was still showing relative weakness to gold. So that was a little tell that silver was about to break out, because the miners were signaling that silver was finally about to break that $32.50 ceiling. And it certainly did the following week. We had, and matter of fact, yesterday, silver closed at $35, which was the next resistance level. It went up there really quickly. That's what happens when silver moves in both directions. It moves really quickly. So, and also we've had a breakout above that multi-year resistance. See, when the miners were flagging, they were flagging below multi-year resistance and 40 in the GDX and 49 in the GDXJ. And they broke out simultaneously with the silver price. You see, when you've seen, basically you saw that gold move when gold broke out above 2,100 and ran to 2,500. It did not take gold stocks and the miners with it. Gold stocks and the miners continued to lag. I think the reason for that is that the major reason for the gold price breaking out was central banks buying gold. And central banks don't buy gold stocks, and they don't buy silver. So those were lagging. So we needed basically the miners to break out of those strong resistance levels at the same time as silver was breaking out of the strong resistance. And that's indeed what's happened. And it's also brought in a lot of mainstream activity into the gold price. You're seeing Western investors buying gold ETFs, even though China has stopped buying for the past 5 months. You see, when the gold price got too high, China stopped buying. They were buying when it was cheap. And now the Western investors are pretty much taking up that slack for the past 5 months.
So I guess the question everyone's asking is, now that we've had these breakouts, will gold and silver again seek to frustrate the majority of investors like they always do?
Well, I don't see that happening. I see weakness continuing to be bought now that these strong resistance levels are trying to become floors, especially now that you're finally seeing some mainstream retail investment coming into the sector. That was the big thing that was lacking in this sector was basically retail, who left this sector about 12 years ago when gold broke down below 1,500 back in 2013. That pretty much took the generalists out of the sector, and especially out of the mining sector, and even more especially out of the junior sector. The juniors have been wallowing around at really depressed levels, despite the gold price rising to nearly $2,800 now. But recently, we've seen that change. We've seen since the GDX and GDXJ broke out above those strong resistance levels last week. We're seeing a lot of juniors do the same, and we're seeing lagging juniors starting to break out of strong cumulative bases at much lower levels. So the juniors still have a lot of catching up, even though the miners still have a lot of catching up to the gold price. I mean, the GDX still has about 25% higher to go to reach its 2011 peak when gold was still well below $2,000 an ounce. But the GDXJ has about 65% more to gain since it broke down from its high at 137 back in 2011. It's still right around $54-$55 here. So it's got plenty of catching up to do. And then if you take a look at the smaller juniors that are still well below that are still basically trading at well below where they should, considering where the gold price is, that's where the real opportunity lies.
Hey, remember, we talked about Newmont last time and the stellar earnings, and it still took the market like 2 more weeks after we talked about it, even though earnings were coming up and we all knew it, to break out. And now Newmont, when we talked, I think Newmont was 41 or 42. It's now 58, and it went even higher than that.
Yes. And speaking of Newmont, later today, after the close today, here on October 23rd, Newmont's going to kick off Q3 earnings seasons with their financial results. And they're expected to really blow it out of the park, because basically the gold price in Q3 averaged $24.77 an ounce, which is $140 higher than where it averaged in Q2. And we had blowout quarters in Q1 and Q2 in Newmont and several and most other major mining companies. So I expect that once Newmont comes out with their results today, that'll set the tone for the rest of the sector going into the end of the year. And I wouldn't be surprised to see Newmont beat expectations. And like I said, this will be the third quarter of miners beating expectations. So I don't see generalist fund managers being able to ignore this sector too much longer. And like I said, we're starting to see mainstream interest come into the sector, and a third consecutive blowout quarter is going to get these fund managers really interested in this sector, especially if the stock market starts to roll over in earnest. It's starting to roll over here today, and investors are going to look for something to rotate their incredibly huge AI gains into something that is undervalued. And I don't think there's very many sectors out there more undervalued than gold stocks, despite the gold price being up 34% this year and trading at all-time highs over $2,700 an ounce.
And, Newmont broke the cup with a handle pattern back earlier, a few months earlier, right? We were watching that cup with a handle. And
well, yeah. I mean, if you take a look at the silver price now, that's got an even more attractive cup and handle pattern. Matter of fact, the handle is got its own cup and handle pattern from a multi-decade cup in silver. I mean, I don't even know if you would consider it a cup and handle since it's been that long. But the silver price is incredibly bullish, and especially when you consider the fact that the gold price has now finally reached its inflation adjusted high set back in January of 1980, when we had the gold price have that huge spike ending to the bull market in January 1980 when it got to $850 an ounce. Well, the gold price had yet to reach that level in government inflation adjusted terms until just recently. But if you take a look at silver, the silver price needs to get to $150 to reach its inflation adjusted price that the Hunt brothers took it to back in 1980.
Yeah, well, Eric Sprott's saying $300 silver, right?
Yeah, well, I don't know about these grandiose calls about gold. I saw a number today in gold of $150,000. Now, you always see these crazy calls when you see the gold market really start to take off. I like to be more pragmatic, and I'll be very happy if the gold price hits my target of $3,000 by Q1 of next year.
Very likely. Very likely. So what effect, if any, do you think the election is having? Everybody talks about the election, not from a political standpoint, of course, but right. just in terms of markets. And is Trump good for inflation?
Well, gold's got so many tailwinds, You've got the debt situation. You've got the geopolitical situation. You've got this contentious U.S. election that's drawing even closer, where, it's shaping up to where neither side is going to accept the result. And that would create even more chaos in the marketplace. You've got on the Democrat side, they're saying that Trump is basically a felon, and if he wins, he shouldn't be president. And then on the Republican side, you've got the Republicans saying that Kamala is not even a legitimate candidate because she didn't go through the process. So I wouldn't be surprised if the result, when we do get one on November 6th or 7th or whatever it's going to be, that will probably go and have to be decided in the Supreme Court. So there's no doubt that the gold price is sensing all this chaos going on, and it just continues to rise. And each time we have dips, they're bought even quicker. I mean, we had that $80 correction lasted within a week, and it was bought right away, and then went right back up over 2,700 and created, I think it's 39th or 40th daily all-time high since March. So, it's really interesting the way it's unfolding here, and it's kind of scary at the same time.
Yeah, a little bit. It'll be interesting to see how they get out of this mess if they want to.
Yeah,
it's a mess.
It's a very dangerous situation. I mean, sure, as gold investors, you like to see the gold price rising, but for the reasons why it's rising, you're not really happy about.
No. Well, then you've got the collapse of China taking place as well, which,
Right. The stimulus there that they keep trying to save their market. Yeah. I mean, that's also keeping the gold price higher. And then we had Canada come out today and lower another 50 basis points. So, lower real interest rates, these geopolitical chaos, the debt situation, which is untenable. I mean, neither of these presidential candidates even brings it up because there's no answer for it.
Yeah. Ain't that the truth, huh? Yeah. So to be avoided at all possible costs.
Right. And gold the gold chart looks just like a giant middle finger to everything that's going on right now.
Yes, it does. Yes, it does. All right. So what do you think we can look forward to? You said $3,000 gold by Q1 of 25.
Yeah, and you could see silver hit $40. I mean, it's already hit 35, and we're seeing a nice little healthy correction today because it went from $32.50 to $35 in just a few sessions. But yeah, I mean, and at the same time, you're seeing silver come down and probably test the breakout at 32.50, 33. You're also seeing a lot of these gold stocks and silver stocks that are breaking out of their huge consolidation patterns from multi-year resistance. They're coming back to test their resistance. So that's giving, speculators an opportunity to get into these stocks that have already broken out.
All right. So the stocks are going to be active, and M&A is also picking up. We've seen a few major acquisitions take place since we last spoke.
Yes. I mean, these mining assets controlled by juniors that provide new gold sources and leverage to these company portfolios that need growth. They're becoming increasingly attractive to these majors and mid tiers, because with the rising cash flow that they're creating now, with margins now. I mean, these margins are in Q3 are going to be upwards of $1,000 an ounce. So they've already concentrated on the health of their balance sheets. They've got healthy balance sheets. They've got a lot of cash. They're paying dividends. They're doing share buybacks. The next thing they got to do is replace those ounces, and they've started to do that now. And M&A's really started to pick up.
Yeah, and we saw with Newmont in particular, took like a lot of write-offs. They knew this was going to happen, so they cleared the decks. They wrote off everything. They're selling all sorts of what they call
lower tier two assets. Yes.
Yeah, which any mining company out there would give their eye teeth
exactly
for.
Right.
What are they thinking here? Because
they're concentrating on higher margin ounces and bigger deposits with blue sky potential. They want the best of the best.
But where is it? Does it exist, the best of the best?
It does, and they're holding on to the mines that they feel meet that tier 1 criteria that produce upwards of 300 over 300,000 ounces a year, and have 10, 15, 20 year reserves. So this is the sweet spot, and there's not a lot of those assets around. And now that the gold price has really taken off, a lot of these numbers that these analysts are basing these numbers on, they're fantasy. I mean, there's no way that I really don't see the gold price going back below $2,000 an ounce yet. A lot of these economic studies are still done at sub $2,000 an ounce. So the market is starting to price in the fact that, hey, the floor should probably be $2,500 an ounce. So if you use $2,500 an ounce as a floor, just about every major deposit out there that has a late stage economic study makes good money at $2,500 an ounce. The market hasn't really caught on to the smart money's caught on to this, because we've seen a lot of these juniors really take off with the GDX and GDXJ, the late stage juniors with these high margin that are high margin, especially if they're at the finance stage, close to the finance stage, they're shovel ready or close to being shovel ready. They've really taken off. But
there's so few of them, right? There's projects.
There's very few of those projects out there. So what's going to happen is, after these juniors have already run up so much, they're going to start, rotating those profits into the lower tier juniors that still, that they still reach that criteria, but maybe they're not at the finance stage, and they still need some more de-risking, or also they also need more permit de-risking. That's the thing, because some of these projects are still 2, 3, 4 years away from being shovel ready.
And in lesser jurisdictions, right? Less secure.
Exactly.
South of the border.
No jurisdiction is completely 100% safe. But there are top tier jurisdictions and lower tier jurisdictions, and the ones in top tier jurisdictions, you say you've got this multi-million ounce deposit that you're de-risking in Canada, and which is a top tier jurisdiction, and you've got the access to capital. You've got the really tight share structure. You've done a great job raising money at the right times, but you look at the permitting, and it's going to be another 2-3 years before it gets permitted, because it takes a long time to get a mine permitted in Canada. And then maybe you go over to West Africa to a company like Cote d'Ivoire, which is a lower risk jurisdiction in a higher risk area of the world. If you need a permit over there, you just ask for one and they give it to you.
Like Namibia.
So exactly, in Namibia and Cote d'Ivoire, absolutely.
Yeah.
They're and because basically they take a chunk of the asset. They take 10-20% of the asset, and they give you the permit as soon as you need it.
Okay. Got a question for you. They were a sponsor of my show years back, and they were directly impacted by the last election. Assume that the former president 45 gets elected. I'm talking about Trilogy. Because they had the permit to build the road and the money their way.
Ambler. Ambler. That's been a big, huge contention, bane of contention over there. And it's hit a lot of Alaskan companies. Because you're already starting to see these stocks move because it looks increasingly likely that Trump's going to win the election. So anything that's going to benefit from Trump winning the election, as far as permitting is concerned, these stocks are already getting bid higher.
And that this time, because he knows how the system works, he's going to be vicious in getting rid of all obstacles. Like, for instance, this is totally off topic, and I'm not, this isn't my vote of support for him. This is just a fact of his last administration. It was taking 10 years to get a highway project cleared through the Department of Transportation in Washington. And what did he do? He said, if there's no significant federal environmental action, something like 50 page or 100 pages will do. But if there's federal action, 150, and you're getting one person who is in charge of your application throughout the lifespan of it, this speeded things up dramatically, not to mention the policy of before you can pass one new regulation, you got to get rid of two. And that actually turned into 20. So assume that he hits the ground running. This could be a golden period for mining here.
Yes, absolutely. It's no secret that we need more metals for this, for this green movement. And
this pipe dream, you mean? Pipe dream.
Exactly. So, they've got to fast track these permitting timelines, and in Canada and the US, they call them top tier jurisdictions, but then, which I agree they are because of the governments and
less confiscation on the back end, but
exactly
on the front end.
Exactly. But the red tape you have to go through and the timelines you have to deal with to get these permits is too long. And they're already starting to address it in BC.
Imagine.
Exactly.
Imagine if copper projects get greenlighted like Trilogies, which is one of the best untapped.
Oh, yeah. They're just waiting for the permit. They've got everything set up and they're just waiting for that permit.
And we don't even know how much they really have there because there's multiple deposits that they haven't even gone into because the market won't price it. So why bother with it? But there's multiple potential projects at district
right
there. That's probably the richest untapped copper deposit in the world, or one of the top three. And so, and then just imagine that they unleash lithium production, which there's no real reason to do it, but there's no reason not to. There's no reason to inhibit any of these productions, any of these minerals, so-called crucial ones, because the state of the art of mining is not like it was 100 years ago or even 30 years ago. We're in a different realm. So environmentally, it's just the objections aren't real.
Right.
And imagine they unleash it and lithium goes down to a fraction and of what it is now, which is a fraction of what it was a couple of years ago.
Mm-hmm.
And all these other metals that we need, we could see a major impact here.
Absolutely. Yeah. I mean, especially in silver, because silver has been in a deficit now for 4 years. And, it's just it's required in so many it's required in so many more things now than it was 20 years ago, that it's now more of an industrial metal than it is a precious metal.
It's required in my safe.
and mine as well.
I've always held on. I had to sell a little gold over the years, divorces, taxes, weddings, bar mitzvahs, all that good shit. And that's the first time I ever cursed on the show in 14 years. And just the divorces. Divorces. So, but I never sold an ounce of silver and even added to it.
Same here. Yeah, the junk silver that I bought at less than $5 an ounce back in 2003, 2004, whatever it was, I still got it all. I'm not touching it.
And I was a big buyer after the financial collapse when it was $7 to $9 an ounce and 10. And I bought up until the low 20s, which I never regretted, but not much in the low 20s. Almost all of it and the junk silver, I think I was paying $8,000-9,000 a bag. What's a bag of junk now?
Oh, I don't know. I don't even follow it anymore, but I know that. But when I bought it, it was
20 something.
Junk was trading at a discount.
Discount to the same here. Exactly.
Yeah. No, you can't get discount to spot at all anymore. There's premium to spot on everything now.
You know what I bought? I did it with just an exercise for community members to show that you could be done. I bought war nickels, maybe a couple $1,000 worth, but they're 35% silver, and they were trading at like a 12% discount to melt value when I bought them, David.
Right. It's great. Yeah, it's like collecting juniors that are trading at less than cash in the bank.
Yeah. I mean, like, what are they thinking here? This isn't rational here. These markets are not behaving rational. And hopefully I'll be alive when they start trading rationally. And I think we're getting to that point, and I still got a little life left in me.
Yeah, absolutely. Yes.
Little bit, a couple more years, hopefully, if God willing. But we're not stopped clocks here, right? We're not right twice a day, whether we do anything or not. This is the result of analysis and understanding markets that we stood our position.
Oh, absolutely. Yeah. For over 20 years, I've stood my position on this. And it's been a long, crazy roller coaster ride, but I wouldn't do anything different. I love doing it, and I love educating people on the not only the value of gold and silver, but basically teaching them how to manage their risk while trying to make money in this very risky and volatile sector.
Volatile sector, but when it moves like no one's business. And just a couple of pointers out there for you people. If you're buying stuff from people you don't know, the first thing you have to do with every coin you buy is weigh it. All right. If it's off by a bit, drop it, do the sound test. And if you can find somebody with the X-ray gun, X-ray it, because that is foolproof. You can't.
Yeah. Tungsten weighs the same amount, right?
Right. Because I've heard of silver coming out of fakes rounds coming out of China, like Northwest Territorial, which was a sketchy operation, but they weighed exactly the same, but the measurements are off. You're not in a position when you're looking to buy metal that you're going to be measure it with a caliper and all that. You're just not, but you certainly can weigh a bunch of them at once, drop them, and listen to the musical sound of silver. It's unmistakable. And get a scanner. Other people have scanners. Right. Scanners work almost as good as the X-rays. But that's just a piece of advice, because no matter how much you trust who you're buying it from, generally they're going to be good, but sometimes they get beat. So you have to be vigilant for this.
And as the generalist investor finally, starts to come into this sector more and more, the scams are going to increase even more and more.
And the fakes, David, are better than ever. I mean, I could be faked. I mean, and you can't, if you just go to some guy in the market, you can't trust them when they say, oh, this isn't real. You have to go to a real person, a real coin shop or bullion dealer, and don't get screwed on this because, like, I know if I buy from Andy Schectman, I never have to worry, but I still check and I weigh it, I definitely weigh it. If the weight's off, then you got to go further. If the weight's spot on, generally you're going to be good. So that's just a warning to you people out there who have woken up to the wisdom of our ways and now know that this thing is real. And what we've been telling you, me for 14 years, you for longer, David, is true.
Yeah, it's really starting to happen. And this sector is so freaking tiny. It doesn't take a lot of generalist interest to really start it moving. And then buying begets buying, just like selling has begotten selling over the past few years, even though gold price has risen so much.
If Eric Sprott went into the silver market tomorrow and bought up $250 million of silver on the COMEX, that would make a dent. And
he could pull a Warren Buffett move and do something like that.
But he doesn't need to. But I think he's going to be as rich as Elon Musk. Wrote an article about it when the market really breaks out.
I wouldn't be surprised. I wouldn't put it past him.
Yeah, he will be as rich as Elon Musk. But that's for another day. David, tell us, where do we find you? How do we subscribe? How do we connect with you?
My website is juniorminerjunkie.com. And you could also find me on Kitco each week. I have a weekly column that's posted every Friday.
All right. Excellent. And I read it every Friday. You can subscribe. It'll come to your mailbox. Just go over to David's site. And the link is in the show notes to this interview. Questions for David and myself, shoot an email to me, kl@kerrylutz.com. David, we'll talk to you in 6 weeks or so. Let's see what's happening.
Okay, buddy. Looking forward to it. Always great to see you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.